I am Prashant, and thank you, Dr. Ganesh, for this brief introduction. I thought I'll touch upon one of the most important topics, which is getting debated every year, is about fintechs, unicorns, and all those stuff. So I thought I'll just share my thoughts around how these things are getting stacked up and what is the relationship between a digital highway and the fintech. When I say digital highway, the corollary, the most nascent and common corollary would be just like any other infrastructural highway roads which the government kind of constructs, and that kinds of leads to an evolution of that. Same as what you see in a physical plane, we also see a similar kind of structure on a digital plane. Now, how do I differentiate between this thought? I'm sure a lot of you would have heard about Digital India initiatives and Digital India vision around those lot of this stuff. And what are the core themes? Core themes around what are these stuff? One of the first and foremost core themes of Digital India is high-speed internet. Whether you're able to get 2G, 3G, 4G, 5G, broadband, wired line, wired, wireless, any type of connectivity which is there. That's the one theme which the government has been working on pretty strongly around it. Second core theme is around, cradle to grave identity. What does it mean? That you as a citizen of India, you as a people of India, your identity right from the day you are born till you leave out from this motherland, everything is identified and kept in a particular fashion. Third piece of this is that, mobility. How do you access? So you should have a great mobile device or a cheap mobile device or an option, and mobile and mobility, so that you can move anywhere within this country, and then you can still access what is there. That's one. Third piece is fourth piece is the commerce. So you should also have a bank account, so that the transactions becomes key and easy into that. And there are other two parts to it. One is governance. Me as a citizen would require a lot of services. Whether it is Aadhaar, PAN, passport, municipality services, customer complaints, RTOs, you name anything. All of these services should finally land up in your hand. That is one into that. And then how all of these services interoperably talk to each other. It's not important that only you have got a services. For example, you don't want PAN and then the PAN is isolated and kept in Celos. You don't want Aadhaar and Aadhaar is done in Celos. Passport is done kept in Celos, and they don't talk to each other. This kind of doesn't solve your problem. This is the core theme around what the Digital India initiatives are all based on. And now look at our country's context in last, say, 20 odd years. 1995 to 2000 phase, it was more about automation. Companies, corporates, people, everybody was focusing on automating the things. Automation is simply, the works becomes much more easier. Repeat jobs are much more easier, quicker to do. This is there. Then post 2000, 2005, 10, it's all about up to 2010, where it is all about software development. So you had end-to-end digital. The talk was we'll do E2E, digital process automation. So everything was digital, but it was only restricted to me as an individual, me as a corporate, me as one department of government, me as I was digitizing my process. Everybody was digitizing his process, but not talking to each other. Now we are talking about open ecosystems, digital ecosystems. What does it mean, open digital system? So digital means each of these systems or computer software should be in a position to talk to one another, and in a much more inoperable way. So what was India Stack? So the government then came out with very, very beautiful concept on, and it was known as India Stack. So India Stack has 5-6 elements further into it. One of the core India Stack element was around Aadhaar, eKYC, UPI, eSign, DigiLocker. That was one portion of India Stack. Second portion of India Stack was about Diksha. It's largely on education. So I'm just giving you a background. How does each of these people used to stack? And the third piece was around national digital health. And then it was national urban planning, and the last one was agriculture. While I'm not touching the other fours because they are still at an evolutionary phase of our structure, This has kind of not gone back to a level wherein we can talk a lot of stuff around it. But from 2000 2008, 10, 10, 11, 12, and then you can see the first piece of India stack, which is around Aadhaar, eKYC, UPI, e-sign, DigiLocker. These kind of things have gone ahead and completely changed the way we are going to interact. And what is it, what is the core theme around a lot of this stuff? The fundamental core theme around all of this stuff is that it's an open architecture. Anybody who wants to join can go ahead and join it. Anybody, anybody into that. You know. Now let us look at pure from that. So my own personal take, there are two types of words in financial technologies. One is known as techfin, one and the other is known as fintech. What is the difference between a techfin and a fintech? Techfin is a technological company trying to find a financial solutions. Fintech is a financial company trying to work on a technological solutions. What are the two different fundamental difference around it? One lies more in the regulated space, other doesn't lie in any regulated space. A bank is a financial company working on a technological space to work a better customer experience. You know, you keep on working, you keep on evolving every day. So you look at historical of all financial technology, everybody came from banks, you know, whether it was Citi, whether it was Deutsche, whether it was Stanchart, Indian banks, every company developed its own set of softwares to deal and tackle with the customer problem. But challenge, you are in a regulated space. You can't go ahead and experiment, you know, in a such a way that the regulator doesn't keep into that. Come down to the other side into that. Technological companies trying to get into finances. What is the solution they do? They are not bounded by regulation. So they are more like guys who are working on a technological solutions, and they keep on finding out new solutions, you know, into that. But they don't. The downside is they don't have great balance sheet, a great capital. The moment they say that I want to get into lending business, they immediately you have to start coming into the regulated space, wherein your capital gets regulated, the way you lend gets regulated, your products get regulated, checked, whether you're lending at a usurious rate, your lending practices, your NPA, your access to capital market, your access to debt market, your bank lines, everything then starts getting into this regulated space. And this is where things are happening. That's why you'll see lot of fintechs, what you call, are great technological companies trying to arrive at technological solutions, but at the same time they don't want to convert themselves fully into a bank or a non-banking financial company, or, yeah, because immediately you do that, you land in a regulated space where everything is regulated by a regulator. You know, a lot of other regulators also start coming into the play. So this theme around this whole digital highway and fintech is very interesting, you know, into that. Now, why do I say that into that? So if you drill down further onto this India stack around into that, you'll find that there are great payment solutions which are coming into picture. UPI, IMPS, RTGS, NEFT, phenomenal technology. UPI is like, it's like one of the best technology being ever developed for in a payment space, both for P2P lendings, you know, or person to person payment settlement, B2C, C2C, customer to customer. And this phenomenon is so quick, so easy to deal with. Any of these banks can latch onto it, and just you can go ahead and do into that. Then there is also phenomenal work happening on the lending space. So you'll have invoice based lending, you will have revenue based lending models, you will have new people underwriting a different credit score based lending models, and various people are experimenting around that. So they are getting into much more data points. They, you know, capture much more data points. They try to arrive at a model, scoring model options into that. Then there is this whole concept around neo banking, whether it's bank should be digital, fully digital, partially digital, half digital. That's another. And there are another 2-3 space which is bubbling. One is the brokering space. If you look at brokering space, there is a huge amount of thing happening on the wealth space. So wealth creation is very different, you know, into that. And then the usual stuff you have got, you know, software as a services, banking as a services. Now you're talking about insurance as a service, and all those stuff will start flowing into that. Now this ecosystem kind of does a lot of great work around that. Now the financial technologies, I think huge amount of work has gone into the payment space. lot of companies have worked into the payment space. Look so easy, you want to set up a website and you want to set up a commerce, you need to set up what you call a payment option. You go to Razorpay, they elicit, they do, and your payment can be done by anybody else in India. You need an UPI handle, unique phone link to your phone number, link to anything. So you go into type it, and then you can pay. So quick, so easy to do that. And same if you do want to do larger transactions, you can go to RTGS, real time gross settlement. The RBI is talking about settling it for 24 hours. Why this is important? You have to understand that trade is basically exchange of money and exchange of good. Exchange in a normal shop, when you go, you exchange of money and exchange of good happens, across the counter. You give money, gives you good, gives money, gives you good. But the moment you get into a B2B commerce space, trade, exchange of good and exchange of money don't happen at same point in time. They keep on changing. So you may do exchange of good quickly, but the payment will come, say, 20 days after, 10 days after, part advance, part not advance, breaking up into a lot of this stuff. Why does it make it so hassle proof? You don't need checks to deal with it, so quickly. You give him a part instruction, you can put a request to pay, he will pay you partially, half. Everything is so quickly, and everything is digitized. It then immediately comes into your system. You can use e-invoice as a facility. Invoicing is done into that. I hope you also guys are aware that the government is also promoting a lot of work happening on the GST space, and wherein e-invoicing is getting mandatory over a period of time. I think up to 2021 it was 50 crores and above company, everything has to be done on e-invoicing, and gradually they want to go up to 5 crores and above annual turnover. Once you do that, all your invoices are to be e-based. Why these are changing the nature, the way the financial sector is going to boom in India. You can create lending models based on GST. So you can ping to GST, get the information, and you can create your own lending model, which earlier would have been very difficult to do, do so. You can ping to ITR, you can get it there. You can create a stack and ping to bank and get a bank statement, and create a forensic model around bank statements for lending. And information is quick and handy, and so quick to do that. You can ping to Aadhaar, you can ping to KYCs, and a lot of this stuff are going to happen. For example, in my NBFC, if I create a digital lending model, the number we open APIs or closed API which I have to connect is, my last count when I was working was 93. So a pure vanilla loan origination system which you do for an unsecured loan business, I'm not talking about secured loan business, I have to integrate my system with 93 APIs. That's the level of integration which you have to do, and kind of work which you need to do into that. And each of these things are doing it in amazing. Provident Fund has opened up its base so that you can get information about people working on authenticity of job. RTOs have opened up. You can use RTO information is there. You can ping and get information. And obviously, Aadhaar, obviously, Sibils have created database. CERSAI database is there. Now they're talking about an account aggregator, where the account aggregator means that one aggregator, you'll have all informations of all the various categories of account, loan statements. You can build EMI based models. You can build multiple set of models, and a lot of these fintechs are actually working on it. Few of the fintechs which I have personally worked, they also try to give you these kind of solutions around it. A lot of them try to be in what you call a platform based, so they want to interact and they want to be more interactive around those spaces around it. These changes are mind-boggling and staggering. But to give you one into that, one base statistics is that 152 crore Aadhaar authentication was done by the financial system. 152 crore authentication. So you can imagine the quantum of transactions into that. eKYC transaction 22.84 crores. Those are the numbers people are using into that. UPI transaction runs into billions, and this is one of the best mode of money settlement which has been been made outside a lot of these systems, and now we are talking about UPI between India and Singapore, India and France, India and UK. So once you deal with that, then imagine so it will be so easy and quick to move money from Singapore to India, or from India to Singapore, or India to France, or into that. And that's the quality of into that. The other piece which I thought I'll touch upon briefly is, I'm sure a lot of you would have downloaded DigiLocker in your mobile app, and it's a phenomenal app, phenomenal, and it has a legal sanctity to it equally. If you download your RC or license in your DigiLocker app, you need not carry your physical RC and license any point in time. You can simply go to any police officer and show it to them, and it's acceptable. Why this kind of changes? Once you have a lot of this information, personal information on DigiLocker, authentications becomes completely easy. The more authentication becomes easier, the more transaction becomes easier. Knowing your customer, what you call in banking parlance, know your customer, is something which you have to pick up at all point in time. And that's what kinds of makes those transactions so easier. You have linked it to Aadhaar, PAN, passport. You keep on linking it to many other things, and then it becomes so much more easier into that. The other piece I wanted to touch about is obviously on open networks, is on whether it's more scalable or not, whether it is such a beautiful scalable, and whether it is interoperable between private and public players. This has to be the core theme around which it kind of works around it. And as long as that is open, you will see a lot of developments coming into this picture. Why this theme around open networks, or what you call open development ecosystems, digital ecosystems, open digital ecosystems, how kind of this kind of adds on and gives a wider scope to a lot of people around that. Now, to give you one basic narration, I was on a holiday to Andaman, I think a few months back, and Andaman doesn't have a great what you call network systems or ATM. It's a naval base, so Wi-Fi is a challenge into that. In a remote island, somebody had just put up one Wi-Fi and you could make a payment so quickly. Ease of paying up, without carrying being bothered to carry your cash or anything. Mobile based payments, and that's so easy. Makes the entire commercial transaction so quick and so easy. So easy into that. And that's where a lot of this fintech would come into play. The fintechs would come into a lot of this fintech would be evolving, building their products in line with them into that. That's one piece which is kind of working out very strongly into that. So now let me touch up technological aspects around fintech. Like I told you, the payment techs are changing the way people have reacted into that, and also there are new ways of lending which is also coming out and evolving in a different way, and a lot of new VC money is coming into this field. The 3-4 fields which kind of are generating a lot amount of income. One is the wealth tech into that, and when I say wealth, you need to understand the difference. So to put it in a simple language, wealth products are not consumption product, and wealth lending is not consumption based lending, and consumption based lending and wealth based lending are two different aspect of around that. That is why you will see a lot of growth around your brokerages, which they are promoting wealth based lending and investment. Huge amount of interest is coming into that field. Payments are pretty dated now. I think 4-5 years we have seen a lot of new companies have kind of gone into the payment space, have worked extensively into the payment space. That has been happening into that. And the other piece which will be happening, and you will see a huge amount of next amount of people investing more money would be on the neo banking. The neo banking space which will be there into that, and that is one piece which will be kind of debating. So the regulators across geographies are kind of now open to that idea that there can be a bank without a branch. The regulators are gradually opening and thinking in that direction that yes, there can be a what you call whether we should allow fully digitally banks or not. Earlier, this seems a little more sacrilegious, but I personally believe that now it would be what you call there around a lot of this into that state. So to give you some odd what you call flavor around a lot of these stuff. I'm sure a lot of you know a lot of these companies into that. The companies like BillDesk, Policy Bazaar, ATM, Zerodha, MobiKwik, ChargeBee, Razorpay, PhonePe, Zeta, Grow, Acco, Digit, OneCard, CoinSeed, Cred, Open, Noxy, BharatPay, QuantiCX, Slice, Cred. Each of these companies are kind of working in a space which was largely regulated, but also are trying to getting into trying out to find out solutions which are more suitable to what you call the Indian consumers, more suitable to the needs of the Indian people into that. So mobile seems to be one of the big areas which has been kind of each of these guys are into that. So from Jan in the last 5 odd years, I think 29 or 30 billion dollars worth of investment came into all of these companies in various categories and into that, and a lot of these companies have kind of are into that, and people are still kind of looking at they are looking at alternate to cash flow, non cash flow based lendings. They are looking at cash flow based lendings, invoice based lendings. They are looking at alternate structural lendings, various kind of they're creating their own what you call scorecard based lendings. They are looking at supply chain finance in a big way, whether it is there into that invoice discounting at first level, invoice discounting at second level, invoice discounting at third level into that. So lot of this stuff and into that, each of these companies are creating this own set of what you call value propositions. When I say value proposition, how do you arrive at into that, and this has been going on into that. The only piece wherein it's still little hazy is around data privacy, whether they are kind of are able to build out very strongly on data privacy. That is one. Second piece is around what you call governance, whether in your pursuit of growth, whether you are giving something or you are kind of getting you're a little challenged on corporate governance structure into that is second piece. That's why you'll see a lot of this regulatory intervention happening time to time, trying to rectify this into that. And you need to also understand regulation and regulatory action are always 3 years behind. What you do today and what the regulators are going to react is going to react only 2 to 3 years. And my own personal interaction with regulator is the way I look at things little differently, to just digress into that. As long as you guys are not touching the retail depositors and not putting any risk to retail depositors' money or not trying to cheat result, they are little okay. As long as you are funding from your wholesale borrowings or a wholesale into that. That's number one. Second is that you need to address customer grievances much more clearly. That's the theme which they carry very, very robustly. And third is around your corporate governance structures. Your internal institutional setups should be good. You should be in a position to address a lot of this stuff in a much better way. Now, these are the 2-3 themes which our regulator seems to be very clear around that. And anyone who believes that no, it's not possible is something which kind of makes them little upset and angry. And that's how you will always see their regulatory action being too harsh, comes out as a form of a what you call as a hammer. And then we feel that, oh, they shouldn't have kind of touched upon this subject so harshly into that. And this revolution, so coming back to the earlier piece around this, that The government also is working very extensively on electrification. So you see, as the number of villages getting electrified, as the number of phone penetrations and going to go up, the opportunities around the lending space is also going to go up dramatically into that. My own understanding and latest was that close to India would have, out of 140 odd crore population of India, around will have a smartphone of 60-65 people having access to smartphone. 60-65 crore people will have access to mobile or a smartphone. And still, there is a large chunk of people which is not there. Aadhaar would be 99% penetration. I guess only few would not have an Aadhaar penetrations on into that, but largely the India is largely on Aadhaar. Aadhaar PAN linking is also being done in a big way. So knowing your customer or getting identity is much more easier, and that makes the platform much more easier to deal with it, and acquiring customers, scaling up volumes is kind of also very much into is happening on a big time.
Now we open for questions, so you can raise your hand and then ask your questions, or you can type in your questions in the chat room, and you can access that whatever way you want to interact with Prashant.
Yeah, yes, there always has been a chatter around what you call whether we should charge UPI or not, whether it should be made free, whether it should be rupees. I think it's going to remain free for some point in time, but obviously there is a cost around a lot of this transaction to happen. Government currently subsidize and makes it into the free. Now, whether it's going to have an impact on fintech, I personally don't think so. The amount would be much smaller and lower. The UPI transaction size is also smaller, and the amount would be much smaller. In the area of what was the adoption of blockchain in the financial sector, it's not so good. I think a lot of banks are trying to experiment on doing this on a blockchain based, largely on invoice discounting and all those stuff with some corporates. Reliance did 1 or 2 transactions with, I think, ICICI and some 1 or 2 foreign banks and SBI as well. It's a very costly apparatus, and plus it's very time consuming. It's not so easy that smoothly it kind of happens into that. But I guess over a period of time, when the technology becomes much more, because since you have to upgrade a lot of ledgers across these people, it's going to take time. And I don't see that. I'll put it this way: on a large ticket size transaction, it's much more easier to do it. On a small ticket size transaction, it's still far off. The cost is prohibitive. And in the area of wealth management, how do you see the role of algorithm with robo advisor managing wealth of customer? It will robo advisor. The two types of lending which in a wealth advisory happens into that. Of late, people have gone into like small cases. Of late, people have gone into some algorithm based structure of offering advice into that. That's more on the retail side, which happens. But if you talk about HNI, ultra HNI, and big investments, so upwards of $1 million and above, I haven't seen AI-based algorithm kind of advising it into it. On a small portfolio basis or a small transaction, whether you go for this mutual fund or this alternate investment funds, or you go for this, mixed equity bag or mixed equity and debt bag, there I have seen, but I've not seen it happening big time in terms of what you call HNI, UHNI, and on in that space. There it is still largely relationship based driven model into that. Yeah. How will NPCI be international journey? Oh, I think this is going to be a phenomenal journey around that. Very few countries have these kind of structures, wherein they can do this transmission. I was reading this report pretty recently. Germany seems to be struggling to get their UPI type handles created in their own. So they have this legacy infrastructure, and it is so difficult to deal with that. And also not only that, interoperability is one of the key themes around it. Anybody can latch on. Anybody can. So all 135 banks, big banks, cooperative banks, small banks are going to put to NPCI to this UPI handle, and you can do transactions. It's so quick into that. How to handle small value transaction? You can use API, you can use cards, you can use PhonePe, Paytm. Any of these models are available around that, and you can use FASTag as well. FASTag also has that RFID based technology wherein you can put in the money, you go to petrol pump, cans off, and do that. That's also a possible into that. When we talk about increasing ease in lending through various channels, should we not worry about the world debt? There are few country community debt is yes, we should be worried about world debt. But then there are two schools of thought. The one school of thought says that a moderate level of debt and deficit is good for a growth of the economy. That's one school of thought which says that. The other school of thought says that no, it's not into that. Of my own sense was that from 1980s to till date, I think all countries across global has been okay with a level of deficit, fiscal deficit, and the world has grown around it into that. But yes, I look, this is a very broad question. I think Professor Ganesh should be able to answer it much better around countries' debt and fiscal deficit.
I think the question is more about the private debt. With increased private debt, then what? I don't think it's about public debt that he's asking. If you can clarify, it's about private debt. If that debt becomes very large, then what happens is the question.
Yeah.
So talking about country level debt, government debt.
Okay. So I'll put it this way: is that corporate debts going up or borrowing in dollars is a problem. As long as you borrow in rupee and keep it into rupees, it's not that much of a bigger problem. That's how I look at it.
Same thing applies to government debt also.
Yes.
If you are borrowing in the local currency, for the government, it is a lot easier to repay those debt, and including you have an option of printing the money, which corporates don't have. But when it comes to borrowing in terms of foreign currency, then of course it's a different ballgame altogether. Which has been the problem with some of the European countries like Greece, etc., which are borrowed in currency with which they have no power to print. So that's it.
Yeah. No, that's the core theme around private debt, specifically corporate debts around that. As long as you're borrowing in rupees and your revenues are in rupees, you're largely manageable. Borrowing in dollars and revenues in rupees is a big problematic area for every reason. What will be the plan once the new technology 5G? Oh, speed is going to go up like crazy. The mobile speeds going up like crazy. What you are able to do transaction or what you are not able to do transactions like this, you're going to do it over phone. Much more. The videos are going to play much more smoother, better, clearer. Your ability to do transaction, deal with it is far more better into that. So 5G has its own set of benefit it will bring into the people's life. What is the business model of a fintech company for revenue generation if they're going forward to a scale up to the business through digital lending only, or their other revenue stream, partnering with banks on their balance sheet, or just this Alok, this you need to this depends whether you want to be a platform or you want to be a lender. Now, lending would mean that you need to have a strong, robust balance sheet. That's number one. When I say balance sheet, you have to understand. So, to just give you something around that, how do I finance my customers? First, I need to have my own equity. Then I'm going to leverage that equity by borrowing through a debt market, either through a commercial paper, either through NCD route, either through a bank lines, either through any of these things, and then I'm going to lend it. So I borrow at X rate, I lend it at X plus some delta rates. And then I kind of leverage. How much can I leverage my balance sheet? 6 times, 7 times. The RBI regulations on the regulator would start coming back and hitting you around that model, that 5-6 times you can leverage. How much equity can you bring in? If you bring in $1 billion equity, you can leverage by another $5-6 billion of the balance sheet size max. It can't go beyond that. So what is the option left for? Then you need to downsell. You need to tranche it through a securitization mode or a direct assignment, or you transell, or whatever model people may choose it on that into that. It depends upon. A lot of fintechs currently are in the process of saying that I'm going to originate and you underwrite. I'm going to originate. So what does the origination model mean? My reach to customer is better. My UI UX experience is better. Customer is going to come to my platform. We do A, B, C, D, E, F activity, and then I'll pass on to you. You book it on your books, and I'll provide you services. That's the model, and then we'll have some revenue sharing around that model. That's how they currently are doing it. All of the fintechs are going to do it. This is the model which they have chosen into that. Depends upon them. If they believe that they can underwrite better, they have to find out a model of doing it. There are people who are underwriting assets, and there are people who are not underwriting assets. There are people who underwrite 10% of the assets and 90s by the other people. There are people who underwrite 50% of the asset and not. Depends upon the model which they believe they can generate. But remember, in all these fintechs, between a fee and a non-fee exercise, the fee can give you 0.5, 0.25, 1%. But the lending models can give you 5%, 6%, 8%. So it's always lending which is makes more money rather than the front end piece into that. Unless you want to scale and you're more into scaling up the model into that. Does banking has avenues to lend to new age company as they do not have traditional forms of collateral? Yes, it does. It does. I don't think so. Traditional forms of collaterals are needed there are unsecured lending which banks give, and there are secured lending which bank gives. They're both type of lending which bank does. Why? Why? So what you call in a normal term to explain it to you, it will be like the risk weighted assets. So I have to provision for my capital according to my lending, what I do. If you are a good rated corporate with a good what you call cash flow and rating, I'll have to provision less of my capital to lend it to you. But if you are a poor rated corporate or an entity whose rating is low, I'll have to provide more for a capital for you into that. Now it depends upon the model which that new age company has in its structure or cash flow or internal rating, what you call grades, internal grade rating, which you into that. You can go to external people and get also rated either from CRISIL, Fitch, ICRA, Moody, whichever you feel. And if they're going to rate you well, you will get loan without any collaterals as well. That's also a possibility around that.
My question is, do you see the same kind of problem like the shadow banking problem that happened, post that 2015, that kind of problem happening now with this fintech business coming into play, and then increased systemic risk or something like that?
Yeah. So, well, while the media uses the word shadow banking, I'm not a great fan of shadow banking. But my own take on shadow banking is that the nearest to shadow banking is a mutual fund, wherein they take public money and they kind of lend. Is there any systemic risk around shadow banking? Why? I think we have to understand the context. Number one. Non-banking financial companies, what you call as a shadow banking, is only in India. Worldwide, people don't have a concept known as non-banking financial company. A financial company is a financial company, then it's a 100% regulated. In India, between a non-banking financial company and a financial companies, which like banks and other things, there is what you call they are on a high regulatory specs rather than, and this is on a low regulatory regime. For example, to give you one basic into that, till 1.5 years back, non-banking financial companies up to 180 days doesn't make an NPA, and banks 90 days used to make an NPA. There's a fundamental difference in the way how you collect, capital. How do you collect a lot of this stuff around that? Do they pose systemic risk? Yes. I think the question comes around is that if you are going to take money from banks to expand your portfolio, you are basically systemically transferring your risk to the bank. So it's an indirect way of transferring the risk, not the direct way. But yeah, that's number one. Number two, while everybody's okay to take money from the banking systems or market, the challenges comes in if your governance standards are low and you hit large amount of NPAs. The moment you will hit a large amount of NPAs, no new person is going to put a lot of money around that, and then it's like a cycle, So one NBFC goes bad, then the other one won't put money, then there is a restriction internally, drawn down, why you are lending too much, do an assessment. And that's the risk which I think a regulator has been pretty clear of late. They are driving a lot of they're removing a lot of these regulatory challenges between that. The latest regulation which I have gone through and which I've seen it, which came somewhere in the first quarter of this year, or somewhere around that. they have gone ahead and classified the banking into non-banking companies into 3-4 categories. Up to 1,000 crores, they are like, you're a small guy and into that. And then there is this mid-layered, what you call, into that up to 5,000 crore. The moment you cross 5,000 crores of asset size, the regulation different kind of kicks in. Your governance standard changes. Your credit officer, risk officers needs to be different, aligned, and all the stuff. And then there is obviously the bigger one. They said that we'll kind of deal with it the way we deal with banks. They have kind of started segregating these rules, and they are
this already.
Yes. They don't want any big guys with a lakh crore balance sheet size hitting in a rough pocket area wherein further lending to the sector is disrupted into that. Now, how can finance technology partner products or differentiate themselves from other by providing their? That's a very depends upon the vendors themselves. There are various categories of services which we need. For example, I told you there are 93 apps. I need to lend 93. So each of these vendors are different for providing us with a different set of solutions into that, right from collections to authentication to transaction monitoring, to all this. How is your views on embedded finance? How can you see it evolving for retail credit and SME credit? Look, my own sense is that India has got close to 4 crores SME. And if all banks and all companies currently scratch the surface, I don't think so they're going to onboard more than 50 lakhs of such SMEs. There's still a long way to go on onboarding a lot of these guys into that. They're just barely scratching the surface around that.
I think more or less we are done. So excellent, Prashant. Thank you for your talk. You've delivered your talk within 30 minutes, and then you could also take questions. So thanks for the excellent time management as well as the content of the talk. I think all of us were enlightened with this talk. I personally have benefited from this talk. So thank you very much, Prashant.
Thank you, sir. Thank you all. Thanks. Bye.